It finally happened. The Federal Reserve cut interest rates for the first time in 4 years. But what will this mean for that high yield savings account that you and I signed up for several years ago? Well, let's discuss that and some ways that you can continue to make sure that the money you have in your HYSA continues to grow. So the decision by the Federal Reserve was made in response to signs that inflation is moderating. Stating in their press release that came out, the committee has gained greater confidence that inflation is moving sustainably toward 2%. Later, in that same press release, they stated, in light of the progress of inflation and the balance of risks, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. With this rate cut, hopefully we'll see stimulated economic growth and avoid a potential recession. The Federal Reserve is hoping by cutting rates, this will help make borrowing cheaper and encourage spending, which can boost economic activity. But time will tell, because I am a bit skeptical that we'll see an increase in spending or even borrowing anytime soon, because the cost of goods, the cost of a home, and so much else are still ridiculously high. One thing I am hopeful of is mortgage rates coming down and the opportunities for business to invest. I do think people will be more encouraged to buy a home now and possibly refinance into a lower rate as those opportunities to get lower rates come. And well, we're already starting to see lower mortgage rates, and I do think we can expect to see that trend continue. So what about your high yield savings account that was earning an APY of 5% or more? Well, I can tell you, based on looking at our CIT Bank high yield savings account, we've already noticed that the APY dropped down from 5.05% to 4.85% APY. And I do expect it to come down even further, just like all the other financial institutions offering savings accounts with APYs in the 4 to 5% range. And if you notice the same thing with your account, comment below who you have your HYSA with and what the current rate is. Now, if you're wanting to find something you can invest your money to keep getting that 4 to 5% APY, you can always look at CDs, certificates of deposit. There are a lot of financial institutions offering CDs that have that 5% APY or very close to it. The one major point about CDs is that your money is typically invested for a certain amount of time, anywhere from 3 months to 5 years. And if you wanted to access that money during that time period, well, then you would likely have some kind of fees you would be responsible for. But the flip side to that is that you get to lock your money into a decent rate for the next few years, and this could especially be beneficial if you don't have a need for that money right away. Now, you may have built up a good amount of money over the last 2 to 3 years with your high yield savings account, and you have some money that you're ready to invest. If you're in this position and you're inclined to invest, well, you have some options. But it is important, once you get ready to invest in something like the stock market, the value of your investments, whether they're single stocks or index funds or mutual funds, can go down or up. Now, I personally am a fan of low-cost, broad-based index funds and ETFs, exchange traded funds, and I'll link to a video that goes into more of that. But a quick summary of why I like index funds and ETFs is that they're low cost. They usually have no management fees and historically outperform the majority of the actively managed mutual funds that compete against them. And there are index funds and ETFs for the many different asset classes out there: stock index funds, bond index funds, real estate based index funds. And if you're interested, index funds that invest in cryptocurrencies, there's that too. So because I am at a stage in my life where I'm okay with risk and can tolerate the ups and downs of the stock market, I am mostly invested in the US Total Market Index Fund at Fidelity and Vanguard, with about 80 to 85% of my investment portfolio, and the rest goes to an international stock index fund that's actually in my 401k. Again, that's just me, and if you wanted to take some of the funds in your high yield savings account to invest, I think that would be smart, as long as you didn't need to spend the money for some things like property taxes, bills, high interest debt, or some things like that. Now, another option is just to leave the money where it is in your high yield savings account. I do think we'll still be able to get decent yields on the money that we have in our high yield savings account. Of course, in my opinion, the money that is in that high yield savings account is best for something like an emergency fund, and anyone who just needs to park money somewhere until they know what they want to do with it. So if you are planning to just keep the money in your high yield savings account, just consider the likelihood that that yield will continue to be lowered and you may miss out on higher returns if you don't invest in the previously mentioned investments. As you're preparing to invest and look at different investment accounts to open, you may find that there's a lot of information and all that can be confusing, overwhelming, which is why you want to check out the video on the screen next, and I'll share with you one thing I wish I knew about investing when I started.